Gilbert, thank you so much for joining FF News' coverage of Sibos 2022. How are you doing?
Great, thank you, Doug. It's great to be here.
It's an absolute pleasure having you. Now, Gilbert, could you tell our viewers your name, your job role, and your organisation?
Yeah, Gilbert Verdian. I'm the CEO at Quant, and we solve interoperability for institutions on any DLT for any blockchain.
Absolutely amazing. Now, obviously, I think that's one element that's maybe stopping the traditional financial institutions from getting fully involved is this fear of there's so many different chains. Where do you begin? So how does Quant come in and solve that utility issue?
We actually saw the issue very early on, back in 2015. You know that not everyone is going to be using the same technology. Everyone's going to use their own. And having that vision ended up establishing the ISO standard for blockchain back in 2016. So that was a great way to harmonize the technology so everyone can adopt it. And our view is it's agnostic. Everyone should have the freedom and choice to use any DLT for any use case. So we've solved it through an API gateway where institutions can talk payment type like transactions and messages to any blockchain to access any digital asset for their use cases.
That's absolutely amazing. Now, who are the type of institutions that you work with to help them in this?
We're mainly in financial services, and we're working predominantly with central banks, commercial banks and investment banks, and now getting into capital markets with asset managers and the whole idea of tokenization. That's picked up. Everyone is looking at the technology on how it can transform traditional assets and new asset classes to be digital assets to gain the benefits of privacy, velocity, fractionalization, and having access to new customers and new markets through digital assets. It's an exciting space right now.
It's amazing that it's come at the crux of Web 3.0 in the fact that now we're not just looking at phygital, we're looking at how can we establish assets in a digital space as well as in a physical one. So where do you think it's going to go in the future? Do you think that we're seeing digital assets almost like second-class citizens to physical ones, and is that going to change in this decade?
I think they're on par. They're equal, and we're seeing that because people have figured I can actually transform a physical asset, which is illiquid, it's not doing anything, into a digital asset and create new value and fractionalize and sell it and transact it. And that includes securities, equities, any other instrument. So what we're seeing is the marriage of digital assets with money and tokenized money. So if you link a traditional physical asset as a digital asset to money, you can easily transact and have deliver reverse payments, use commercial stable coins, central bank digital currencies, and you gain speed and velocity which you couldn't do before. So it removes friction, settlement is almost instant, and all the counterparty risk is managed because it's all on the blockchain. Absolutely
brilliant. Now, a lot of the fiat currencies and traditional institutions are currently focusing on getting accepted to the ISO 20022 standard. Is that going to have any impact on you guys, or are you way ahead of that?
So the standard that I helped establish is TC 307, and that was 2016. It's been running every year. There's 57 countries working on that right now. And what it means is we're going to create standards that are compatible to existing ones. So 222 will be able to talk blockchain with the work that's happening within TC 307 eventually.
That's absolutely brilliant, and key to your core ethos of creating that interoperability across all paradigms. So, I mean, once you get to that stage, what's it going to mean for financial institutions, customers, whether it's on the corporate side or on the retail side? Once we have this ubiquity across all platforms, what's it going to mean?
It means customers and businesses can actually access new assets which they couldn't before. You had to be a fund, you had to be an institution, and we're seeing that walled garden being broken down, which is amazing because traditional funds can easily digitize and tokenize, and we're seeing that with KKR. They just opened up one of their huge health funds, in the billions, and they're getting people to access it for the first time, which couldn't have access to that before. And that means more customers, more value for them, but it also means consumers and businesses can do things they just didn't have the opportunity to do. So again, taking an illiquid asset, tokenizing it as a digital asset, using that as collateral in a loan in a new way, it's really transforming financial services. And this time just doesn't happen often. It's every 30 years we get to this transformational phase of FS.
Amazing. Well, if we divide that by 10, it's been 3 years since the last physical Sibos, and I've got to ask, what's caught your eye? What trends have made you go, that's interesting?
I think what's been exciting for this Sibos, we were at 2019, is top of mind. Everyone is talking about CBDCs and digital assets, and they weren't, not many years ago. It was only 3 years ago that they didn't do that. And what's changed is the regulation has allowed institutions to explore and implement the technology. But what we've seen is everyone has a friction point and a barrier of interoperability. How do we solve interoperability? How do we make this work within our existing core banking system, with our capital market system? And that's something we solved in 2018. So we're quite ahead of the market to be able to implement interoperable blockchain solutions to coexist with their existing solutions. And that work we're actually doing with large banks, central banks, and really testing, instead of just talking about it, testing CBDCs.
Absolutely amazing. Thank you so much for your time.
Thank you.
That was brilliant.